Welcome dear students. This is the 6th video on practice problem for admission of partner. Today we will be solving sum number 6 on page number 164 of your government textbook. So let's read sum number 6. Question number 6. Vrushali and Leena are equal partners. We will underline this. So this is our old ratio. So our old ratio is 1:1. In the business, their balance sheet as on 31st March 2018 stood as under. They have given us the balance sheet, but our first step is to read the adjustment and mark star in the balance sheet. So let's begin with adjustment. They decided to admit Aparna. So Aparna is admitted as a new partner on 1st April 2018 on the following terms. Number 1, the machinery and building be depreciated by 10%, which means I have to mark star for machinery and building. So let's mark star for building and machinery. Let's continue. Reserve for doubtful debts to be increased by 5,000. Okay. So students, I will be explaining you this while we are solving the adjustment. So we need to mark star for reserve for doubtful debts. That's RDD. So I'll mark star for RDD. Adjustment number 2. Bills receivable are taken over by Vrushali at the discount of 10%. That means bills receivable is taken by a partner, but the partner is taking at a discount, which means there will be 2 stars for it. One is that the partner is taking and the second one is for discount. So we will mark 2 stars for bills receivable. Adjustment number 3. Aparna should bring 60,000 as capital, which means the new partner is bringing 60,000 as capital for her 1/4 share in the future profit. So this is an information that her profit for the future is 1/4. Number 4, the capital account of all the partners be adjusted in proportion in their new profit sharing ratio by opening current accounts of the partners. So students, today we are going to learn capital adjustment in new profit sharing ratio, and it has to be adjusted through current account. Okay. Next, prepare profit and loss adjustment account, which is also called as revaluation account, partners capital account, balance sheet of the new firm. But students, as you are aware, we will be solving the ledger as well as journal. So let's begin with step number 1, that is transferring stage. We will now read the liability side and put them into the respective columns. So on the liability side, we have sundry creditors, which we will write it on the liability side. Student, there is a mistake. 90,000 is written twice. So we cancel the inner column amount. Okay. It will be only one amount, that is 90,000. So let's write sundry creditors on the liability side. So on the liability side, we will leave around first 5 to 6 lines. And then I'll write sundry creditors. There is no star. So I'll write it in the outer column 90,000. Next is capitals of Vrushali and Leena. We will be writing in partners capital account on the credit side as by balance brought down. For Vrushali it is 45,000 and for Leena 30,000. Aparna is a new partner, so dash. Next is general reserve 18,000 rupees. Now general reserve is the accumulated profits and losses. So this amount has to be distributed to the old partners in old ratio. And students, if you look at the old ratio, it is equal. Okay, so we will divide 18,000 by 2. So it's a very simple calculation. It will be 9,000 each. So let's write it in partner's capital account on the credit side. By general reserve, 9,000 for Vrishali and 9,000 for Leena. Now students, this is our transferring stage. So we will have journal entry for accumulated profits and losses. So let's write the journal for this. So our journal entry will be partner is credit. If partner is credit, general reserve account will become debit. So our entry will be general reserve account debit to Vrishali capital and to Leena capital. Let's write this in our journal. So the date will be 1st April 18, the day the new partner was admitted. Our first journal entry will be general reserve account debit to Vrishali capital account to Leena capital account. Now total amount of general reserve was 18,000. It had to be distributed to old partners in old ratio and our old ratio was equal. So 9,000 each. We'll write the narration being general reserve distributed to old partners in old ratio. So students, we have completed liability side. We will now move on to asset side. The first is given to us is cash in bank. So cash in bank, students, as you are aware, we will be preparing a working note. So we'll prepare a working note for bank account. So we normally prepare working note for 2 columns, that is cash or bank and goodwill account. So we have prepared bank account as a working note. On the debit side, I'll write down as to balance brought down 62,000. Next is debtors. So I will write debtors on the asset side. Debtors, I'll write 31,000 in the inner column. And for RDD, we have a star. So I'll say less RDD. I'll mark a star and I'll keep this blank. Next is building. So I'll write building. I'll mark a star. Inner column 55,000. Next is machinery. Again, I'll mark a star. Inner column 24,000. Next is bills receivable. And there are 2 stars for it. So I will mark 2 stars. And I'll write the amount in the inner column 12,000. With this, students, we have completed step number 1, transferring stage. We will now begin with step number 2, reading of adjustment. They decided to admit Aparna on 1st April 2018 on the following terms. So Aparna is admitted as a new partner. Adjustment number 1. The machinery and building be depreciated by 10%. There's a full stop. So we will first do depreciation on machinery and building at the rate of 10%. So depreciation means minus. So I'll say less dep at the rate of 10% for building. So 55,000, 10% will be 5,500. So from 55,000, I'll minus 5,500. The value will be 49,500. We will also do depreciation for machinery. Say less dep at the rate of 10%. So 24,000 10% will be 2,400. 24,000 minus 2,400 will be 21,600. So this is our first effect for depreciation on building and machinery. Now students, if you look at the value has depreciated, which means there is a decrease in the value of asset. So let us put up our second effect. So since the value of our asset has decreased, our second effect will be in revaluation account debit, because it is an expense for the business. So I'll write to building account 5,500, to machinery account 2,400. Let's continue with adjustment number 1. Reserve for doubtful debts to be increased by 5,000. So students, this language is very, very important. They are saying to increase it by 5,000. We already have RDD amounted to rupees 1,000. So we have to further increase it by another 5,000, which means our new RDD will be now rupees 6,000. So our RDD new value will be 6,000 rupees, because it is increased by 5,000. So 1,000 plus 5,000 will give us 6,000. So 31,000 minus 6,000, I'll get a balance of 25,000 in the outer column. So this is our first effect for RDD. Now since the value of our RDD has increased, which means it is an expense for our business, which means we will be writing it on revaluation account debit side. So I'll write to RDD account, and we have increased it by 5,000. So we had a further more expense of rupees 5,000. Adjustment number 2. Bills receivable are taken over by Vrushali at the discount of 10%. So students, your bills receivable has two adjustments. First adjustment is partner is taking over asset, and the second one is partner is taking over asset at a discounted value. So first we will always solve discount, and after discount we will say that the partner is taking over. So let's do this adjustment. So in our bills receivable, we will first calculate the discount. So there's a discount at the rate of 10%. So 12,000, 10% will be 1,200. So from 12,000, I'll minus 1,200. I'll get a value of 10,800, which I'll still write in the inner column because there is another star. Now students, the value of our asset has decreased, which means again there is an expense. So we will first have a second effect for discount. So discount for our asset, which means it is an expense for the business. So we will be writing it in revaluation account debit side. To bills receivable account 1,200. Now we will continue with bills receivable. After charging discount, they said that bills receivable is taken over by Vrushali. So we'll say less taken by Vrushali. Vrushali is a partner who is taking over asset 10,800, which means we do not have bills receivable in our assets anymore. So if partner is taking over asset, partner will be debit. So let's write the second effect. So in partner's capital account on the debit side, we will write to bills receivable Vrishali has taken over. So in Vrishali's column, 10,800. And the other partners will be that. So students, as we have completed with revaluation, okay, so let us write the journal entry. If you look at your evaluation account, we only have journal entry on the debit side. There will be no journal entry on the credit side. So let us understand journal entry on the debit side. So our journal entry will be revaluation account debit to all these names. So let's write this in a journal. Our date will be common. We'll have revaluation entry. So our entry will be revaluation account debit to building account to machinery account to RDD account and to bills receivable account. Now we will write the amounts next to them. For building, the amount was 5,500, which I'll write on the credit. Machinery is 2,400. RDD is 5,000 rupees. And bills receivable is 1,200. So students, when we total this amount, we will get a total of 14,100 in revaluation account. We'll write the narration being assets revalued. One of our partner, Vrishali, had also taken over asset. So we will also have journal entry for this. Now partner is debit, which means Vrishali is debit. So bills receivable will be credit. So let's write this in a journal. So the date will be common. Our entry will be Vrishali capital account debit to bills receivable account. And Vrishali has taken it for 10,800. We will write the narration being asset taken over by partner. We will now move on to adjustment number 3. Aparna should bring rupees 60,000 as capital for her 1/4 share in the future profit. So we see Aparna is a new partner. New partner is bringing in capital. So let's write the journal first. So again, our date will be common. New partner is bringing capital. So our entry will be bank account debit to Aparna capital account. And Aparna is bringing in 60,000 rupees. We'll write the narration being capital brought in by new partner. Now students, keeping journal in our mind, let us do the ledger posting. So our journal entry is bank account debit to Aparna capital account. So let's do the ledger for it. Bank account debit. We write the opposite name to Aparna capital account, 60,000 rupees. Now do I have Aparna capital? Yes. So Aparna capital is credit. So capital account credit side, I'll write the opposite name by bank account. And in Aparna's column, I'll write 60,000. Adjustment number 4. The capital account of all partners be adjusted in proportion in their new profit sharing ratio by opening current account of partners. So students, this is nothing but capital adjustment, and for capital adjustment, the first thing that we need to calculate is our new profit sharing ratio. So first let us find out our new profit sharing ratio. So to calculate new ratio, students, following information we require. Old ratio we already know it is equal, so 1:1. The total of it will be 2. How did I get 2? 1 plus 1 is equal to 2. Now they have not given us the new ratio, but they have given us the new share of the partner. So the new share of the partner is 1/4. So I'll do 4 minus 1, that is equal to 3. Now if you look at the totals, the total is different. So let us calculate it. Our ratio is 1:1. That is for the old partner. The total of this 1 plus 1 is 2. Now we will multiply it. Out of 4 share, 1 share is given for the new partner. So the balance 3 shares is going to be given to the old partner. So we'll multiply 3, 3 and multiply by 1. So I'll get 3 ones are 3, 3 ones are 3 and 2 ones are 2. Which means our new ratio is 3:2. So this is our new ratio. So students, our new ratio is 3:2. Now let us do the capital adjustment. Now for capital adjustment, they have very clearly told us we have to take the new partner's capital as the base. So for 2 share, Aparna brought in 60,000 of capital. Okay, so we will have to find out how much capital will be brought in by Vrushali and how much capital will be brought in by Leena. So let us find out. So we can do our cross multiplication method, share and rupees. So we say for 2 share, the partner brought in 60,000 rupees. So for 3 share, how much he will bring? So we cross multiply 60,000 multiplied by 3 divided by 2. So I'll do the calculation. 2 ones are 2, 3s are 6. So I have 30,000 multiplied by 3, which is equal to 90,000. Which means Vrushali and Leena both will bring in the same amount, that is 90,000, because both of them share the same ratio. So this is our new capital. So since we have got our capital amount will be always written on the liability side. So let's write the capital amount. So I'll write the capital amount for Vrushali, for Leena and for Aparna. Vrushali we calculated 90,000, Aparna 90,000, Leena 90,000 and Aparna is 60,000. Now students, from where do we get this capital amount? We get this capital amount from partners' capital account. So let's write this in partners' capital account. So in partners' capital account, we will double underline on both the side. And on top we will write it as to balance carried down. Vrushali 90,000, Leena 90,000 and Aparna 60,000. Now before we close capital account, we will first close our revaluation account. So let's close revaluation account. We will double underline on both the side. Now if you see students, we only have the balance on the debit side and we have already calculated this amount. This amount comes to 14,100, which I'll write on both the side. From the bigger total minus the smaller total. There is no total, so the same total will be written on top. Now if you look at it, our expense is more than income. When expense is more than income, which means the business suffered a loss. So on the credit side, I'll write down by loss on revaluation transferred to capital account. We will underline this and we have to only transfer it to old partners, that is Vrushali and Leena, in their old ratio, that is 1:1. So 14,100 equally divided, that is divide by 2, I'll get a total of 7,050, 7,050. Now this is on the credit side. If it is on the credit side, which means it will go on to the debit side of partner's capital account. So on the debit side of partner's capital account, we will write to loss on revaluation. For Vrushali, 7,050 and for Leena also 7,050. So students, we will first write the journal entry for loss on revaluation. If you look at the entry, revaluation account is credit. If revaluation account is credit, who is debit? Partner account is debit. So let's write the entry partner account debit to revaluation account. Let's put this in our journal. So the date will be same. Our journal entry will be Vrushali capital account debit, Leena capital account debit to revaluation account. Vrushali is 7,050, Leena 7,050. Total loss on revaluation 14,100. Write the narration being loss on revaluation transferred to capital account. So students, now we can close our capital account. We will first calculate the debit balance. The debit balance is 10,800 plus 7,050 plus 90,000. So I'll get a total of 1,07,850. Now if I total on the credit side, it is 45,000 plus 9,000. Gives a total of 54,000. Now if you compare students, our debit total is greater than the credit total. So we will write bigger total on both the side. So let's write 1,07,850 on both the sides. From 1,07,850, we will minus 54,000. So I'll get a balance of 53,850, which I'll write on top. Now students, this amount has to be adjusted through current account. So I will write down by current account. Now in the same manner, we will total for Leena. So if you total your Leena's amount on the debit side, you have 7,050 plus 90,000. So 97,050 rupees is on the debit side. And on the credit side, our total is 30 plus 9 is 39,000. So if you see, our debit total is greater than the credit total. So let's write the bigger total on both the side. 97,050 will be written on both the side. From 97,050, I'll minus 39,000. I'll get a balance of 58,050 rupees. And if you see on the credit side, we have a balance carried down for new partner Aparna 60,000. Our credit balance is greater, so I'll write 60 on both the side. From 60, there is nothing to minus, so I've got 60,000 as my balance. So for Aparna will be a dash. Now this has to be adjusted through current account, which we have already written it. Now if this is on the debits, on the credit side, this is on the credit side of partner's capital account, which means we will have to write it on the debit side, which means it will go on the asset side. So let's write this current account on the asset side. So on the asset side, we'll give the heading as current account, Vrishali 53,850 and Leena 58,050. So students, with this we have completed capital adjustment, but what we need to write is our journal entry. Now if you look at this, our partner account is credit. If partner is credit, current account will be debit. So let's write this in our journal. So our date will be common. Our journal entry will be Vrishali current account debit, Leena current account debit to Vrishali capital account to Leena capital account. So we will write the amount. Vrishali is 53,850. Leena's amount is 58,050. The same amount will copy here for Vrishali 53,850 and for Leena 58,050. We'll write the narration being deficit in capital adjusted through current account. With this students, we have completed all our journal entry. So students, now we can tally our balance sheet, but not forgetting we have to first close our working note. So let us first close our bank account. So let's double underline on both the side. 62,000 plus 60,000 will give me 1,22,000, which I'll write on both the side. There is nothing to minus, so I'll have the same total 1,22,000. Now this is on the credit side. So if it's on the credit side, it will be written on the debit side. So we will write this amount on the asset side. So on the asset side, students, I will write down bank balance 1,22,000. And if you see students, in this sum, we do not have goodwill account. Okay, so we will have nothing to balance for goodwill account. I can now tally the balance sheet. So balance sheet on the liability side, I will total the amount. I get a total of 3,30,000. And in the same manner, I will total asset side. And when I total the asset side, I get the same total as liability, that is 3,30,000. With this, students, we have completed ledger and journal posting for sum number 6. And I hope you have understood the sum.